Hello everyone and welcome to Good Morning Trading. I'm delighted to see you again. Let's quickly review the latest news in the financial markets. This week it's going to be very straightforward. We're going to be focused on central bank announcements. That's what's going to drive us all week long. Of course, the Federal Reserve is holding its meeting and will give us its conclusions on interest rate developments. But it's a really big week because we have the US Federal Reserve, the Fed, releasing its results, the ECB meeting as well, plus the Bank of England and the Bank of Canada. So the main central banks are meeting and will be providing information. So we more or less know what's going to happen, but even if we do, that doesn't change the fact that as traders who are very active in the markets, it has an impact on us. Today, there are no issues. On Tuesday, things might slow down a bit because people will be waiting, especially for the US Central Bank. Their decision comes on Wednesday. Just a reminder, they meet on Tuesday, it lasts 48 hours, and during that time, they enjoy a good cigar and savor their best, not to say cognac, no, their best whiskey at least. And the next day, they announce their decision to us. So I found for you a statement from Bruce Cassaman, who is the chief economist at JP Morgan. And yes, in Good Morning Trading, we stop at nothing. We go straight to the chief economists. We don't settle for interns. And what does this chief economist, Mr. Bruce Cassaman, have to say to us? The central bank's forecasts will immediately lean toward higher inflation and lower growth. Needless to say, he's a genius. Of course, with oil prices soaring, there's a risk. There is a risk of having high inflation and weaker growth because consumption will be lower. Prices are going up, so people will consume a bit less. And on top of that, with the war, even if it's the Americans, well, they don't really know where Iran is, but they do know that the situation isn't great, and people tend to consume less in this kind of situation. And to be clear, from this point of view, it's true that a third grader could have come up with that. With a good history teacher, I was good at it. We've postponed or eliminated the expected measures for most central banks, which were supposed to act in March and April. So basically, he had predicted a rate cut in March or April. The central banks, there won't be a rate cut. Thank you. It's always interesting whether it's Bruce Cassaman, chief economist at JP, Morgan telling us this, or one of my former third grade students. Well, let's just say we're more likely to believe JP. Morgan. Yet it's exactly the same analysis. Yes, that's what's going to be annoying. We know that the central banks aren't going to make a move. They're going to be cautious. They're definitely not going to lower rates, and they're not going to raise them either. They'll just say the situation's unstable. And that's true. Do you really need to give us a 10-page report just to tell us that? And despite that, even though we already know 99% in advance what they're going to tell us, well, we're still going to wait. Tuesday is going to be a somewhat risky day on the stock market because we'll be waiting for Wednesday's decision. And on Wednesday at 8 o'clock p.m. and especially at 8:30 p.m. during the speech by the Fed chairman, things might move a bit, even though we already know what they're going to say. But it's okay. That's just how it is. It's part of the routine. Let's move on to the technical analysis of the markets. All right, very good. So let's go. The Nasdaq tried during the night. It dipped below 24,600, then bounced back. We're still in the 15-day range. There's no panic. Knowing that the Nasdaq, which is heavily tech-oriented, is actually benefiting from the war. Drone bombing companies, drone companies, they're in the Nasdaq. Target geolocation companies, they're in the Nasdaq. Security companies, physical security, cybersecurity, and so on. That's mostly in the Nasdaq as well, so there you have it. The Nasdaq remains the index that benefits the most from the war. But still, there are issues with the Strait of Hormuz, so it's the index that's performing the best. In the end, it's in the middle of its range, and it might need to return to the middle and monthly support, which are around 1,832. In any case, what interests me is my famous favorite level, 24,1750. We've moved back above it, so let's see what happens there. Ideally, we move above it, go up to 800, 850, and then come back down to 750 at the market open to get a little bounce off that level. That's something I'll take. That's really my favorite level. Since the beginning of the year, this 750, well, see, in any case, we're positioned right on it. So this weekend, no panic, no worries, nothing at all. Even though you can feel there's a kind of psychological insecurity since Donald Trump, he's calling for a coalition to promote navigation in this Strait of Hormuz. It's still a sign of weak as it means that the Americans can't do it alone. So the Japanese have said no for now. Well, that's fine. Thank you, Japan and Canada and Australia, who said no, not at all. Yeah, well, at the same time, given the size of their fleet, by the time they bring it over, it'll take a while. So that's the situation. A certain someone is feeling a bit isolated. Then we have the French president who brought the aircraft carrier Charles de Gaulle and quite a few other warships. I think that's almost half, maybe a bit more than half of the active French fleet that's been mobilized. The purpose was specifically to secure the Strait of Hormuz and facilitate the passage of cargo ships. So at this point, you think, perfect, they're going to get along. No, because France wants to promote safe passage through the Strait of Hormuz only when there are no more Iranian missiles flying over the strait. So basically, one, when there's no longer any risk, and two, when it won't matter anymore. So as a result, the French president didn't make any statement. He stayed relatively quiet this weekend about it. Oh, wait, who's calling me? Donald Trump? Oh, hello, Donald. How are you? Yeah. Oh, I have an aircraft carrier in the Mediterranean that could help with the Strait of Hormuz. Are you sure? Well, listen, I'll check. I'm not really sure where it is. Yeah, that's my entire fleet. Yeah, oh, no. Well, listen, I'll call you back on Monday. I'll check where it is. I'm not sure right now. Big hugs to you, and did you have a good round of golf? Yeah? Oh, congratulations. Well done. That's great. That's great. We're in trouble, aren't we? Why? Did I bring my aircraft carrier back that quickly? That's kinda it, I think. Maybe it's a little less diplomatic, but maybe I'll do it for you in a way that's a bit more real. We, France, we have everything we need to help the United States of America. But we're not rushing in. That's it. Well, I won't insist. On the S&P 500, let's go. Same thing on the S&P 500. It's touching its monthly middle S2. We're at a 2-month low. It's trying to hold on, but as you can see, the S&P 500 is a bit less tech-heavy. It's dropping much more, so we're seeing exactly the same thing. On the Dow Jones, which is dropping even more, it's at a 2-month low, actually at its lowest point in 15 days. Because here, on the other hand, all the companies in the Dow Jones are suffering from the war. Industrial companies, insurance companies. It's not easy to insure ships or oil tankers at sea right now, so that's completely normal. However, it's still holding steady around its monthly S3 middle, almost at its lowest point of the year. And if you look closely, let's zoom in a bit. And sorry for those listening to the podcast, you won't see the zoom. We actually hit the lowest point of the year last night before bouncing back. So there you go. You can't get any lower than the lowest point of the year. So a slightly negative stance on the CAC 40, still a bit below 8,000. Well, the goal is for it to get back above 8,000. That would calm things down. No panic selling. Anyway, it's so low now that nobody wants to buy it or even sell it anymore. By the way, the DAX is performing bad. You see, the DAX is right in the middle of its 15-day range. It's above 23,400, right around 23,500. So the DAX has really been stuck since March 12th. We've been in this range ever since. It hasn't moved away from its monthly S3 middle from 23,500, 23,000, and 23,600, an extremely tight range. It's interesting, the low is 23,400, the middle of the range is 23,500, and the high point is 23,600. It's barely moving anymore. It's a stabilized situation. Finally, we've had the price of oil barrel go above $100. At $200, well, we had a little record at $102. Now we're at $99 and 610 thousandths of a dollar. So basically we're at $100. That's the version 1. That's a high price for a barrel of oil. Let me tell you, gentlemen, when we're in a booming economy with high demand for oil and the environmentalists aren't making a fuss, we're usually around $75. When the economy stagnates a bit, it's more like $60 to $65. Back in February, we were around $60 to $65. Not a strong demand. But now, being right at $100, that's significant. That's very good for the producing countries, of course, but for the consuming countries, which is basically the rest of humanity, it means products and inflation are likely to rise. And so, we have our superstar economists. Leading the way, JP Morgan's Bruce Kassman, who gives us a brilliant analysis worthy of a middle schooler. Careful, careful. There you go. Thank you, Bruce. They're getting more and more full of themselves. So arrogant. I don't know him personally, and I apologize. It's just that I'm jealous because I'd love to be paid $100,000 to $150,000 a month to do this kind of analysis. That's pretty well paid. And actually, when you're talking about $150,000 a month, it's more like $300,000 a month. So about $3.6 million a year. If it's not $3 million a year, it's not worth being the chief economist at JP Morgan. But you can tell the guy's got some serious credentials. He at least made it to 9th grade. Wow, I'm really being mean this morning. Yeah, I don't like being mean. Honestly, it's pointless. It's stupid. I think it's just a bit of jealousy of it. Yeah, anyway, what else could he have said? Nothing. He did an excellent analysis. Thank you very much, Bruce. No, excellent analysis from Bruce. On Bitcoin, 71,000. I told you it could make a little push towards 75,000, so it went a bit higher. It went up to 60. Oh no, I should put my glasses on. Actually, no, up to 75,000. It went up to 74,190 and then came back down to 71. So here, you can still feel that it wants to go higher. But it took a pretty hard hit above 74,000. So there's a little, well, that was it. I told you the previous week's high was 74,380, and it hit 74,200, something like that. So yeah, it really almost hit last week's high, a perfectly normal downward wave. But if you look at the chart over the past 2 weeks, the lows are more or less getting higher and higher. So there's a little law, a little Dow law, if it goes back to the 74,000 level and manages to break through it. So if it manages to break last week's high and heads back towards 75,000, that would really be a sign of confidence for Bitcoin. Right now, we're not there at all. And our friend Gold, well, listen, our friend Gold, since in the end, this weekend there wasn't any major event except for the French municipal elections, which nobody cares about. Nothing happened in Iran. Nothing special happened. There weren't 3 oil tankers that exploded right in the middle of the Strait of Hormuz. We didn't find any imaginary mines, and, well, prices keep dropping because, overall, tensions have eased. I'm not talking about the intensity of the fighting, but rather the level of risk-related tension. After 3 weeks, as I told you, this is the problem with human beings, but also their greatest strength, adaptability. We start to get used to this kind of situation, and so as a result, we don't have that same reaction anymore. At the start of the war, it was automatic. I need gold, I need gold, I need gold. How long did that last? 36 hours, no more. So right now, we're at a 15-day low on gold, fortunately protected by its monthly pivot point. And we bounced off it twice in a row last night. However, a break below 5,000 on gold would not be a good sign at all. And now we're in the middle of the 2-month range, so there's no more effect. Of reserve currency, of strategic currency, when people are scared, they buy. Gold, by the way, what I often say doesn't mean anything, so let's get back to my little outlook. All right. I hope you're doing well, and we'll wrap it up here. I'll see you again tomorrow for the Good Morning Trading. I'm signing off because it's 8:30 now in 10 seconds, and I'm 10 seconds late for the people in my school. Bye, everyone. See ya.